Still January. Today's the morning blast with myself and Mr. Michael Brown. Just wait for him to turn up. Apologies for not being around yesterday. Is he there? No, he's not. I'll tell you what, I can get the legals out of the way. Nothing discussed on this special session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, Mr. Michael Brown when he gets here, way, and myself, Mr. Ryan Pacey, way. Morning, everyone. Morning. There he is. Let's invite him to be a co-host, I suppose. Invite to co-host. I believe that's worked. I could do a confirmation message when you click it and it works, but alas, Elon hasn't thought of that yet.
Good morning, Ryan. Good morning, everyone.
Here he is. Morning, my dear friend.
Yes, my apologies. I was just on a call then, so.
No need to apologise, my friend. No need to apologise. How the devil are you?
Yeah, I'm not too bad actually, mate. Not too bad. Bloody cold outside this morning.
Oh, it's bloody freezing.
I've swapped the stereotypical finance gilet for a stereotypical finance quarter zip jumper today, which I'm sure.
Oh, a quarter zip,
Mr. Rich Bernard, who I can
to,
see is on the call this morning.
Well, I did look at, funny enough, now we're talking about weather, I did look at the weather and see the wind that's due to hit very shortly and tomorrow, and it's actually put me off coming into London because, quite frankly, I'm at risk of blowing away.
I was just about to
say no one wants that. But yeah, anyway, enough. This isn't a weather show. This isn't the weather markets blast. This is the morning blast. So go on, crack on. What's been happening?
Indeed. Right, let's crack on. Good morning, everybody. It was a generally positive day in terms of risk sentiment yesterday. The S&P 500 adding about 0.6%, hitting a new intraday record high, but closing just 4 points shy of a record close. The tech sector continuing to lead the charge, with the Nasdaq 100 rallying about 1.3% on the day. But that positive sentiment has spread pretty much everywhere, to be honest with you. We saw a decent rally in European equities yesterday as well, with the Stock 600 hitting a fresh record high, the DAX and the FTSE staying at their own records, and even France's CAC 40 hitting its highest level since last summer, perhaps the best example once again of how the stock market is neither reflective of the economy nor of domestic political conditions. Away from the equity space, conditions were relatively quiet. We did see some modest selling pressure coming in across the treasury curve, led by the front end, with 2-year yields rising about 2 basis points to 4.3%. That pressure came despite what was a relatively solid 20-year auction, which stopped through the when issued yield by 1 basis points. And of course, the 20-year is perhaps the most unloved segment of the Treasury curve. It was also a relatively dull day in the FX space, the dollar trading pretty much flat on the day, hovering a few points either side of the 108 figure when you look at the dollar index, although we have seen some marginal dollar upside in early trade this morning. That has in turn taken cable back below the 123 mark and seen the euro retreat back below 104. Dollar yen also trading a touch higher into, of course, the BOJ meeting overnight, which we'll get onto a little bit later on. And in the commodity space, a couple of moves of note. Gold continuing to gain ground yesterday. The yellow metal has found its shine once more, trading around 0.4% higher, and actually is now just about 1% or so away from the record highs that we hit last October. For spot gold, of course, they come in at $2,790 an ounce. And the other move that has caught the eye a little bit is what's going on in the crude complex, with WTI notching a 4th straight daily loss yesterday. That is WTI's worst run since last November. And in turn, we see WTI testing the 200-day moving average to the downside. Not only was it a relatively quiet day in terms of market moves, it was also a relatively quiet day in terms of news and data flow yesterday. Only a couple of headlines really of note, actually, over the last 24 hours or so, which have now rather oddly disappeared from my screen.
Well, that's
so
I've got a couple.
Hang on a second. Oh, I've got them here. Right, let's go back to that. The first in the geopolitical realm is Ukraine President Zelensky. He was speaking in Davos yesterday. He was saying that the US must be part of any peacekeeping force that gets put into place at the end of the Ukraine war, which of course is still going on. We heard from plenty of ECB speakers yesterday as well, pretty much all of them sticking to the script that disinflation is continuing and that the direction of travel for rates is pretty clear and that the pace of those rate cuts is going to depend on incoming economic data. Certainly, that is what ECB President Lagarde had to say at Davos yesterday. I'm sure most participants will be very pleased to learn that the ECB should now be entering their pre-meeting quiet period ahead of their decision next Thursday. Speaking of Europe, we have seen some very, very strong demand for European government bonds recently in terms of auctions and syndications. On Tuesday, we had record demand for the 15-year sale in France. We also had record demand for the 15-year sale here in the UK. And yesterday, we had record demand for the 10-year sale in Spain. So despite those ongoing fiscal jitters, clearly fixed income investors are still happy to be chucking their money at the Eurozone. And speaking of fiscal jitters, we had some worse than expected government borrowing data out of the UK yesterday. December's public sector net borrowing figure boosted by increased debt servicing costs. But the Chancellor, Rachel Reeves, was strutting round Davos nonetheless, saying that the UK's public finances are, and I quote here, now in order, and that her instinct is to have lower taxes and less regulation. Well, that certainly isn't what her actions have been recently. Reeves also said, and again I quote here, that we don't have to keep ratcheting up taxes in order to make our sums add up. Now, I don't want to go on a rant here, but I'm going to anyway. For anyone wondering why UK PLC is in trouble, I think this is a pretty good example, to be completely honest with you. We had some pretty dismal borrowing data out yesterday. We had grim retail sales and GDP growth figures last week, and yet the Chancellor is wandering around a Swiss ski resort on Bloomberg TV, pretending that everything is tickety-boo and trying to bury her head in the sand and ignore the reality of how utterly stuffed we are here in the UK, which is, no wonder why market participants have lost confidence in the fiscal stewardship of the economy as a result.
I would say she's burying her head in the snow more than the sand, but there you go. See what I did.
Oh, well, yes, I suppose she probably is. But that is pretty much it in terms of yesterday. As I say, relatively light day.
Well, perfect. Thank you very much. I've got a few headlines to read out from our dear friend Zach, who is in Thailand doing God knows what, but still finding time to provide the overnight news roundup.
That's not to ask.
Yeah, exactly. I don't want to go down that rabbit hole. I'll give you a clue. Start off in China. China said that mutual funds should raise their holdings of onshore equities by at least 10% annually for the next 3 years, while large state-owned insurers will need to invest 30% of their new policy premiums from 2025, announced at least 100 billion yuan, so that's about $13.75 billion of insurance funds will be invested in stocks in the first half of the year. That's from Bloomberg and Wall Street Journal. More than half of American businesses in China, the highest level in 5 years, say that they are concerned about a further deterioration in the bilateral relationship between the world's two largest economies. That's according to a survey on Reuters. Another fast-spreading wildfire has been sparked in northern LA, prompting renewed fears of death and destruction in a region already decimated by historic wildfires this month. Moving over, Mr. PIMCO's CIO expects the Fed to keep rates steady until there was more clarity either on the demand front, on the data front or the policy front. Bond traders are unwinding bets on 2-year Treasury futures. Open interest rate dropped for 5 straight sessions through Tuesday to the lowest level since March. The contract became the most traded maturity back in November. Japanese retail investors' hunger for overseas equities, as evidenced by NISA data, is weighing further on the yen, adding to downside risks posed by tariffs from Donald Trump and the wide interest rate gap with the US. Traders in dollar yen options are changing their strategy They're going into the expected BOJ rate increase on Friday. They're now now that President Trump's inauguration is over, and they seem to be selling vol in either direction after previously buying downside protection. Where are we now? Moving over to Europe. The EU has promised to help Europe's battled car industry, potentially by using pan-EU subsidies to boost demand for EVs. A classic, our policies aren't working, so we're just going to throw more money at the policies. Great.
Also, just on that, sorry, I was going to say, if the EU do go around subsidising their auto industry, that is going to go down like a lead balloon in Washington,
Oh,
DC.
yeah, exactly that. Exactly that. Saudi Crown Prince MBS told Trump the country is willing to expand its investments and trade with the US in the coming 4 years by 600 billion with a B, or even more if opportunities arose. UK PM Starmer has announced plans to prevent legal challenges from causing delays to major infrastructure projects. So for that, read airports. Obviously, there's a lot in the papers at the moment about potentially further runways opening up all over the show. Confidence in the UK economy sunk lower at the start of the year, according to a survey of consumer sentiment.
Oh, what a
by
surprise.
PRC. I think anyone could have told you that. Fewer than 1 in 6 Britons expect conditions to improve. Yep, that pretty much sums it up. What have we got here? Just a geopolitical headline. Houthi rebels in Yemen have released the crew of the Galaxy Leader more than a year after they seized the ship in the Red Sea and signaled they would stop attacking vessels after the Israel-Hamas ceasefire agreement. And finally, Taiwan plans to propose a draft law on virtual asset service providers in June 2025 to authorize banks to issue stablecoins. But I'm assuming, and I'm guessing, that my right honourable friend Cam, who I can see listening, will be including something along these lines in the crypto market blast, which will be coming out momentarily. So everyone look forward to that. We'll repost that. Yeah, that's it. Back to you in the studio.
Good stuff. Thank you, Ryan. In terms of the day ahead, then, it does look like a relatively busy couple of sessions to come. So things could get considerably more interesting than they have been over the last 24 hours or so. In about 20 minutes' time, we have a policy decision due from the Norges Bank. Rates expected to be held steady at 4.5%. But at the December meeting, the Norges Bank had guided towards the first cut of this cycle coming in March. So, of course, participants will be paying close attention as to whether that guidance is reiterated this time around. Moving into the North American session this afternoon at 1:30, we have the November retail sales print out of Canada. Sales expected to have risen by 0.2% on the month compared to the 0.6% increase seen in October. Likely of more importance and certainly more timely, we will also get a flash estimate as to how sales were faring in December as well. Also at 1:30, we have the weekly US jobless claims report. Initial claims expected to have risen 220,000 in the week to the 18th of January, compared to the 217,000 that we saw in the prior week. Continuing claims expected at 1.866 million from a prior 1.859 million. And of course, bear in mind the initial claims print there does pertain to the January non-farm payrolls survey week. And of course, that non-farm payrolls number is due on the 7th of February. Moving into the remainder of the afternoon at 3:00, we have the latest consumer confidence figures out of the Eurozone. As with that survey that Ryan was just mentioning in terms of the UK, we don't really need a Eurozone survey to tell us that consumers there are pretty pessimistic as well. And then at 4:00 this afternoon, UK time, 5:00 European time, President Trump is due to address the World Economic Forum in Davos. Of course, it will be interesting for participants there to gauge the tone and the rhetoric, particularly in terms of trade policies and tariffs. And then lastly, in terms of data at least and policy decisions, overnight / in the very early hours of Friday morning, we are due to hear from the Bank of Japan. Of course, expectations are pointing towards a 25 basis point hike, which would see the policy rate doubled to 0.5%. We have had sources reports from Reuters, Bloomberg, Nikkei, and Kyodo all nodding towards the fact that the BOJ will indeed pull the trigger on another rate hike at this meeting. So if they stood on hold, it would be incredibly surprising. Given that a hike is pretty much fully priced in at this point, focus will fall on the Bank of Japan's guidance, particularly around how prolonged and how much further this tightening cycle may proceed. And also, of course, I think at the press conference, Ueda will be probed quite intensely on how Trump's, oh, for God's sake, grow up. Oh God, you've totally thrown me now. What was I on about? Ueda. Yes, he'll be questioned as to how Trump's policies may impact what the BOJ is likely to do going forwards. Other bits and bobs to keep an eye on. We do have some supply due from the UK today, a 3-year gilt auction at 10. Speakers, we also hear from the ECB's Escriva and the SMB's Schlegel. And in terms of earnings before the open, we hear from General Electric and American Airlines. And after the market close, we are due to hear from Texas Instruments. And of course, actually, just bear in mind, of course, we did have, after the close on Tuesday, although this is the first time we've spoken to you since, we did have those very, very strong earnings from Netflix, and they were up by about 15% or so on Wednesday. Nice. And that is pretty much your lot.
Nice. Just following on what you said about the BOJ, yes, it seems very, very telegraphed that they are going to hike. But just bear in mind that if any of the major central banks do like to throw spanners in the works, it is the Japanese. So
oh, absolutely.
Yeah, they're the ones that you would point at if you had to guess that one of them was going to screw the market. But I agree with you. I think it seems to be.
And also, actually, just lastly, very lastly on that. The other thing to bear in mind with the BOJ is there could even be more sources reports today. I certainly wouldn't rule out any more headlines on that front. So be very careful with any yen exposures.
Yes. Well, thank you for that, Mr. Brown. Just a quick shout out. Obviously, as I said, shout out to Cam, who does the crypto blast for us. That'll be along shortly. Shout out to Zach, who puts together the overnight news roundup for us. Shout out to Blonde Money, who I will be doing the political blast with in about 15 minutes. Another shout out for Angie, the goddess of grain, for the grain markets blast later on. And of course, finally, a big shout out to PIQ's chief biscuit officer. That would be Ian the dog, because he's blown his cruise shit out, unfortunately. Apparently, it's just one of those things that happens with wear and tear when you have short legs and a big body. So I guess I've got that to look forward to as well. Yeah.
I did not realise that a dog could do their cruciate ligament. I just thought that was Premier League football.
He's a person. He's a real person. But anyway, God. So if we can all send love to Ian, that'd be appreciated. And money and biscuits. Anything you want to send, I'm sure Ian will be very welcome for that. But anyway, we will tune in tomorrow and we will see what happens. See you later.
Bye-bye.